You are looking at a daily chart of Carrier Global. This is from July 31st, 2024. We had it on our ready list. And I'm just doing a post analysis here, video here, just to, show kind of like how I trade and what has been going on the last, 6 weeks or a couple of months here of trading. This is one that I had on my ready list this week of July 31st. Had that 66.50 buy point. And you can see here it consolidated in a base and looked like it wanted to break out. It went up to 70.09 on July 16th and pulled back to the 50. Found support at the 50 and looked like it was going to break out again, right? It's above its moving averages here on this day at 68.11. And I'm just going to go click day by day here. Then it pulls back to the 21, close right at 66.06, near that buy point, right at 66.50. I like buying stocks near their buy point within a base. So that would have been an area where, I'm looking for a bounce off the 66.50 area. Let's say, you bought it here as it found support at the 21 around 66.50. It looks like it's going to break out. Then what happens? It slices its 50 on the second, further to the downside. And at this point, you have to get out, right? Because it's below its 50. You cannot lose on any trade 5%. For me, I don't want to lose more than 5% on any trade because it's just too hard to make them back up. I don't want to take large losses like 10, 20%. You don't argue with the market. The market's telling you right now the stock is going down. And so you have to get rid of it. You don't want to hang on to it hoping that it's going to come back. So on the 5th, it made this low here of 61.21. And by here, I'm out of it, right? I mean, I'm not taking a loss, but I'm watching it. Um, and I want to be open-minded and flexible enough to watch this stock and see how it performs after that, August 5th low. And it looks like it wants to rally, back through its 50. It's just kind of squatting there. It's not going down anymore, but it's certainly not rallying. It's still below that 66.50 buy point. Then here on the 13th, it gets above its moving averages, and it's starting to, firm up, and there it goes. It blasts above the buy point of 66.50. So at this point, I have to be flexible and open-minded. And if I didn't get it at 66.08, as it drove through its moving averages, then I probably would have bought it this day where the range was 67.03 to 68.62. Let's say you got it at, I don't know, $68 or 67.50. You have to be flexible enough and open-minded enough to watch a stock and have the discipline to buy as it comes back through. If, the market's with you, what was happening here is the NASDAQ was weak. It was correcting. It had a 16% correction from, July 11th to that August 5th low. So now the index is starting to heal and the stocks are healing with it, starting to rally. So we're in the stock now at 68 or 67.50 or whatever you want to call it. There's another buy point here, standard buy point at 70.09, and we're already in it before the 70.09 because we're flexible and using this old buy point here. But you can see the moving averages, the 10, the 21, and the 50, they're stacked. They're moving, north in the direction that we like if we're long the stock. And now the 70.09 is going to attract some momentum traders because that's a new high, right? Blue skies. And so the momentum traders probably going to like a breakout here on the 23rd of August. Looks like it makes a nice move above that 70.09, closes at 71.25. So that's a nice candle there for Carrier Global on August 23rd. Yeah, nice 2.5% move on the 23rd. That was a Friday, and then it comes in on Monday, another gain, and starts to show strength here. A little profit taking, pull back, and here we go again. Carrier Global looks super strong. A stock that broke out. I would say from here 66.50. And here at 70.09, which is going to attract some traders. Now you see some profit taking. It pulls back to this buy point at 70.06 on September 3rd. So let's click through here and see where it finds support. No, it slices the 10, comes down to the 21. Oops, finds support. Now bounces. So it shook these people out, right? You bought here, you thought you had a winner, and then it shook you out down to the 21. But it did find support and started to bounce off that 21. And here we can see as I click through the week of September, 9, 10, 11, 12, that's Friday the 13th here. And this thing's obviously breaking out 76.51. And we had it here, it's what did I say, 67.50 or 68. So at this point, it's a nice move, but I'm probably going to take some profits here. That's a big, 10-point move yeah, I'm, that's a nice trade. So for me as a swing trader, I'm taking some off there, probably at least a quarter, and just be, what I call offensive selling, right? Aggressive selling, take profits, don't wait for the thing to pull back. And as I click through here now, the Nasdaq is in an uptrend. It's not in a power trend yet, but it's trending higher. So you're getting tailwinds from the index, and here on the 18th, it closes at 78.19. So we got a winning trade here, and you gotta raise your stop losses here. And I would go to the weekly. I go to the weekly on this stuff. Yeah. And if I had let's say I sold half by now, I would put the stop loss there at 76.13, the low of the week from that week. And I think we got a couple more days in the week. Yeah, the 20th was the Friday there. And it closed right around $80, traded above 80, and then closed right near it. So this is just last week, the 23rd, the 24th, and this thing's powering higher. Looks very strong. The moving averages, got to allow the moving averages to catch up. This is not a, this is not a real high beta stock. It's kind of a slower, steady eddy, but it looks like it wants to form a shelf now. So you have a winning trade. You probably got, half, I would have half position here, and it's just forming a little shelf here. I wouldn't be adding to it at all. Probably looking to, just hold it. There's no sell signs here. But like I said, if I would raise the stop loss too to the low of what was the last one? 76.13. Yeah, I would raise the stop loss to probably about $79. Yeah, I would allow it to go below that low of the week there. Because there's going to be some shenanigans, and they're going to try to shake you out of it as it comes down to the 21. So I wouldn't put it right there at the 79.21 from last Friday or last week's low, excuse me, 79.21. I would give it a little bit of room there, at least 79 or 78 and a quarter. I mean, you've got a winning trade here. So you have to have the flexibility to buy these stocks back when they go through their moving averages. Knife River is another one that was on our ready list. The same type of trade here. I'm going to go back to the date that it was on our ready list on July 31st. We'll go to the daily chart. Same deal. It's got this buy point here, 81.97. And as we click through, well, we know that the yen carry trade, it's shaking everybody out. This thing sliced everything, the 50 and went down to the 200. So you have to sell. If you bought it at 81.97, the buy point, that's a proper buy point. It's trading tight within a base. I mean, it looks very good, but what's going on is the index are selling off. So you have headwinds from the index. So Knife River, you're out of this trade, and then you can watch it. Of course, you watch it, right? And it looks like it's firming up around its 50. It's still got that 81.97 buy point. And as I click through it here, now it's just trending with its moving averages, which are back above the 50. Never went below the 50. They're above the 50, so that's always a healthy sign. And then what happens? Back to the 50 again, squatting at the 50, and then it breaks out. So now I'm going to go back a couple of bars here. So it looks like it's breaking out here, the right side of the base, breaking above a downtrend line. And that's why I watch these downtrend lines, right? So on this day, it broke above this downtrend line. So you can get in early when it makes that move with above average volume on this date, which is September 12th, which was a Thursday. Yeah, 4% move. And let's just say you didn't get it. You're just kind of watching and not real comfortable. And then it breaks through that old 81.97, now has a new buy point at 83. let's just say you got it 83. You're late to the party. You got it 83. You wanted to, make sure that that move was legit. You didn't get it on this day, so you bought it on the Friday the 13th as it broke above there. So you got it at 83. Okay. You have to be flexible enough and be willing to buy back. I usually like to buy back about 10% more. If I own 100 shares, and it goes through and I get shaken out, like here I got shaken out, I'll buy 110 shares. So I buy 10% more. Just give me a little more juice, a little more mojo, a little more skin in the game. So let's just say I got it at 83 and then it started moving up on me. Now, I've got a winning trade here. This is Thursday the 19th. These things are blasting higher. Remember, the index is trending higher as well. Then it pulls back. So I'd go to the weekly. First of all, I'd trim some, probably a quarter or a half here. And then the low is 84. So, I got it at 83. So I'm guaranteed a winning trade, sell half, let half run, and then sell it if it comes back to 84. I don't want it to come back to 84. I don't want to lose those profits, but I also want to let it run and see if this thing can run. And this is last week's move. It traded down to its 10, close at 89.07. So you'd probably have half. But the point is to be flexible enough to, first of all, sell. Don't argue with the market. Be flexible and open-minded enough to buy it back as it drives through its old buy points, and also put stop losses in to guarantee winning trades. Now, I showed you those two just so I can show you this one. There's always, the market's never this easy. It's always easy in retrospect. But if you're trading, so this is ever another one that I had on my Reddit list. Um, and this is a buy point here, 25.69. Let's just say we're in it. Why not? It's got this cup with handle that's supported by its moving average. It looks fine, right? Let's just say we're in it at 25.67. This is not one that I bought, but I'm just doing this exercise to show. Okay, now this is the August 5th low here. It trades down to its 50. You have to be out of this stock here at 23.96. I'm not willing to take these big losses, and 5% is enough for me. I can't take the pain, folks. So now it rallies back up 26.80, right? So okay, we're gonna buy it, right? Because 25.69, excuse me, is our buy point. It's at 26.80. So if you bought this day as it drove back through its moving average, looks great, right? Supported at the 50, driving through its moving averages, up 11, almost 12% on this day. And then we'll see what happens with EverQuote as we go through here. Now, remember, the low was the August 5th date, and here I am on, I'm going to go to Friday the 13th. Now, this thing's below its moving averages once again, below the 50. The NASDAQ starting to heal, and this thing's failing with big volume bars. So I would be out of this stock. So I bought it once, right? And it failed here on the August 5th, had to sell, bought it back as it drove through, and then guess what? Had to sell it again. 5% loss. That's all I'm willing to take, and it's sliced, it's 50. So I'm out of the stock, and let's just see what happens here as I roll through these dates here and get into September. So my buy point still is 25.69, has not approached that. And I would probably just be looking at other stuff now, not really interested because it's already burned me twice, right? And I'm not willing to get burned, 3 times. Burn me once, shame on you. Burn me twice, shame on me, something like that. Anyway, it's below the 50. The 50 is acting as resistance. So, yeah, I probably wouldn't even be watching this stock at this point. It's just two losing trades. I took two losses on it, right? And that's the way it goes. And this is the right here. This is up to date, September 27th. So I had a couple winners. I had a loser. I mean, that's the way it goes. Two losers on this one of 5%. But if you keep your losses at 5% and you buy something like VST, which we did, where was this? Excuse me. I'm going to go to the weekly chart. Yeah, you can see on the weekly, this is a real pronounced downtrend line, right? And then it broke out 2 weeks ago, and then last week had another solid week. So here it is on the daily chart. Here's your downtrend line. The standard buy point there is 107.24. Do not like waiting for that. So it broke above its downtrend line on this day. We had it on our ready list at about 82 something, and it broke above there. And so if you bought this at 82 and it ran up to 120.22, I mean, that's a 50% move. So you have a 50% win. So you could take a lot of 5% losses if you have a 50% wins. This allows you to lose a lot. That's a 10-to-1 ratio, right? 50% win versus 5% loss. So that's what I look for. And we've had a few of these here recently. Vert was the same thing, VRT, Vertiv Holdings, you know, that downtrend line. Just a thing of beauty here as it breaks above. And that was a buy point around 82 as well. It ran above 100, 103.69, now allowing its moving averages to catch up. I still like this one. 97.50 is good for me. I'm going to continue to have this on my ready list here. I think that's a buy. If it pulls back there to that 10 EMA at 90, what is it, 97.50, something like that. Yeah, I think this one's going to be supported. The 10 is 94.44, so allow that to catch up. Anyway, I just want to do some post analysis on some trades, and just keep your losses small is the most critical component. Be flexible and open-minded. If you like a stock, you just might have been early in something like Carrier, you know, back in August. You were just early. You had the right stock, but you had the wrong time. And you gotta, you know, like I say, buy it back. You were early, you lost on it, you lost your 5%. You were flexible enough to buy it back as it went through its moving averages. And the NASDAQ got, you know, trending better. And so, yeah, be flexible, be open-minded, and don't take more than a 5% loss. And definitely analyze your trades. Where did you go right? Where did you go wrong in the trade? And I tell you, for me, that entry point is it's going to solve 90% of your trading issues. Anyway, at mcstockcharts.com, thank you for watching. We never give up.